Welcome. I want you to look at the chart on the screen. To the untrained eye, those jagged lines just scream market volatility. But if you look closer, behind the headlines and the panic, what you're actually seeing is a hidden war. The recent price action we've seen, it isn't just another standard market cycle. This isn't strictly about charts or technical analysis anymore. It is about control. The war for the future of money has officially begun, and today I'm going to show you who is fighting it. To understand this war, we have to understand the combatants. We are witnessing a clash between two distinct architectures. On the left, we have the Financialists. This is the Federal Reserve, JPMorgan, and the big banking dynasties. Their power comes from creating claims on assets rather than owning the assets themselves. Their goal, which has been in place since 1913, is to control the rails and the flow of money. On the right, we have the Sovereignists. These are the nation-states leaving the dollar and individuals choosing self-custody. Their power is completely different. It comes from owning the real permissionless asset. They are trying to exit a system that is designed to extract value from them. So, how have the Financialists maintained control for so long? They use a strategy I call the old playbook. Let's look at the gold market as the perfect example. In the gold market today, for every single ounce of real physical gold, there are over 100 ounces of paper claims or futures contracts trading against it. Wall Street doesn't need to control the physical asset. They just need to control the paper claims. This is critical to understand. The price of gold isn't set by physical supply and demand. It is set by the trading of these paper copies that almost never settle for real metal. This is how they build a system of synthetic control. For decades, that paper game worked, but then something triggered a change. It wasn't just that Bitcoin existed, it was what MicroStrategy did with it. MicroStrategy proved that Bitcoin could function as pristine collateral inside regulated capital markets. This was the spark. This move directly threatened the Financialists' entire model because their model relies on collateral they can create and control. Here is the engine that the banks are terrified of. It is a scarcity flywheel they simply cannot copy. Here's how it works. Investors put money in for a high yield. MicroStrategy uses that capital to buy real Bitcoin, actually taking it off the market. As the supply tightens, the price rises. This makes their collateral stronger, allowing them to borrow even cheaper capital to buy more Bitcoin. It is a self-reinforcing engine powered by the real asset, not synthetic exposure. The banks didn't take this lying down. They launched a counterattack. The first phase was a targeted financial ambush. Take a look at what JPMorgan's prime brokerage did. They suddenly raised the margin requirement on MicroStrategy stock from 50% to 95%. In plain English, to buy $100,000 of MSTR stock, you suddenly needed $95,000 in cash up front. The timing was not a coincidence. This happened right before MicroStrategy's largest Bitcoin purchase in 4 months. And here is the smoking gun. They didn't do this to Tesla or Nvidia. They targeted only MSTR. When the ambush didn't work, they moved to part 2 of the counterattack, the shadow copy. JPMorgan filed for a leveraged Bitcoin-linked structured note. It sounds fancy, but here is the trap. It gives investors the illusion of Bitcoin exposure, but JPMorgan never buys any real Bitcoin. No supply is removed from the market. No scarcity loop is formed. It is the exact same strategy they used to suppress the gold market, flooding the zone with paper. If this feels familiar, it's because we've seen this pattern for 100 years. The playbook is always the same. Centralize the rails, control the story, and suppress the alternatives. In 1910, the Flexner Report centralized medicine, shutting down alternative schools to favor the pharmaceutical model. In the 1920s, we saw the centralization of education into a factory-style model. Post-war, they centralized the food supply, pushing out small farms. And in 1913, they centralized money through the Federal Reserve. They are trying to do the same thing to crypto. But here is the good news. This time, the old playbook is failing. And it's failing because of Bitcoin's monetary physics. First, you can't fake the collateral. Every movement is tracked on the blockchain. It cannot be quietly inflated. Second, you can't shut it down. It is a 24/7 global market with no circuit breakers. And third, you can't trap the capital. If one country tightens the screws, the money just flows offshore to a friendlier jurisdiction. You don't have to take my word for it. Look at their actions. BlackRock, Fidelity, JPMorgan. The rush to create these synthetic products and ETFs isn't happening because Bitcoin is weak. It's happening because Bitcoin is too strong to ignore. They have realized they cannot destroy it, so they are pivoting. They are fighting to control the access to it. They want to be the new gatekeepers. This leaves you with a choice. There are two paths forward. Path one is their rails. You buy their ETFs and synthetic notes. You get some price exposure, sure, but they control the underlying asset. They capture the fees, and you remain a passenger in their system. Path two is your rails. Direct ownership. You own the real, scarce asset. You hold the collateral. You have full sovereignty. In this path, you aren't just using the system, you are the system. We are living through a great monetary shift. We moved from the gold standard to the fiat system, and now we are moving here. For the first time in 110 years, you are not trapped inside the old financial rails. In every past transition, those who stayed on the old rails paid the price, while those who moved early benefited for generations. The question is not if this is happening. The question is, how will you position yourself for it? That's pretty much it. If you have any thoughts on this, let me know what you think in the comments. Also, if you found any value in the video, I would greatly appreciate a thumbs up and hit the bell if you would like to see more of my content. I hope you have a fantastic day.